So as an example, versus 1990 to today, there's been about 80% turnover in the S&P 500, meaning that only 20% of companies that were in there in 1990 are still in there today. Why is that? Well, because AI should scare the crap out of every single board member, C-suite executive in corporate America. AI is at least an order of magnitude of a disruptor that the internet was. There's going to be hundreds and thousands of companies that are going to rise, new companies that are going to be worth a lot of money, and they're going to disrupt the incumbent in a major way, just like the internet, but likely faster than the internet. And so what do you do if you're a corporation that's going into a known era of disruption? Well, it makes sense to invest in AI, but it also makes sense if you have the opportunity to increase the size of your balance sheet.
Matt Cole is the CEO and CIO of Strive Asset Management, leading the charge to make Bitcoin a core part of both everyday and institutional portfolios.
With 16 plus years in high-stakes asset management, including overseeing $70 billion at CalPERS, he's a key voice in reshaping modern investing around Bitcoin and shareholder-first values.
I do think that zombie companies, if they went all in on the Bitcoin standard, will likely become some of the long-run winners in the biggest way, which is kind of it almost sounds like a meme that I could be the most bullish on zombie companies in corporate America because
you mentioned GameStop, and obviously they announced that they're going to move into Bitcoin. And why raise money through debt when you have $5 billion of cash on your hand?
Their cash, the interest on their cash right now is effectively just covering almost dollar for dollar the losses of their business. So until they fix their business problem, they actually don't have the ability to just put that $5 billion into Bitcoin. I think that GameStop should be buying at least $6 billion of it. And so that's to me a minimum metric over the next 12 months. Otherwise, companies, I think, 5-10 years in the future might still put Bitcoin on their balance sheet, but acquire a war chest of Bitcoin. That's not going to persist forever.
Any last thoughts that you want to leave us with?
Understand AI and save in Bitcoin.
Hey guys, welcome back to Less Noise, More Signal. Yet another discussion that I'm looking forward to. I'm today here with Matt from Strive. Cool to have you on, Matt.
Thanks for having me. Excited to be here today.
Yes, exactly. So as I always say, you're also somebody that I found online. Usually nowadays it's always you do your research on X and then you come across these people and they just keep on posting interesting stuff. And it was the same with you. And so I wanted to bring you on to talk about Bitcoin corporate adoption, hurdle rate, also what it's going to mean going forward. And maybe also a little bit about the GameStop situation, that we just recently sort of had news on. And I think at least with your company, you were sort of also involved by sending, I think, a shareholder letter or something to the company GameStop. So would be nice to dive deep there. And but maybe before we dive into it all, maybe if you could quickly introduce yourself, that would be great.
Yeah, so I'm Matt Cole, the CEO of a company called Strive, and we were founded in 2022 by Vivek Ramaswamy and really took an activist arm to index investing. So over the last several decades in America and really globally, there's been a rise of the index like the S&P 500, where you invest in those funds to save for your retirement. And one of the things that was lost in that was when you invest in those funds, you still have a vote and a voice in the future direction of those companies as an owner, people that buy these index funds company, right? And that was not appreciated. And so we saw, I would say, the use of that vote and voice by asset managers to push in political agendas into corporate America at the expense of the share. Strive existed to restore unapologetic capitalism, pursuit of innovation, that maximizing value to shareholders, meritocracy, all these core principles that make for-profit corporations maximize long-run value best that they possibly can. And so the initial focus point for Strive was fighting back a lot against ESG and DEI. And our view on that is we've largely won that battle. And we're always forward looking. Investors have to be forward looking, right? And so as a forward looking investor, that's driven us to our next target, which is corporate adoption of Bitcoin.
Mhm. That's so interesting. I feel like these activities have aged quite well, because like if you had told me maybe 5 years ago or even 4 years ago that the ESG movement, that this is going to maybe, yeah, slow down or even just kind of be kicked out of the sort of window of opportunity, and then I would have said, well, it's probably not going to happen, But at least, especially also here in Europe, I feel like. Uh, yeah, it's been the case, and then one example that I often hear is like the company here in Germany, Rheinmetall, which is like the arms producer, and it did so well over the last few months, I guess, in terms of performance, but a lot of like funds and just investors couldn't hold it because of these ESG mandates and stuff, and that's why a lot of people have been, yeah, sort of rethinking this, because it just obviously doesn't make sense. And now, obviously, with the world is changing, as we're seeing with Europe trying to rearm as well, and so this is all going to change. And so I feel like you were really spot on here. And so I guess it's probably the same. But one should listen to you guys. And now that you're talking about Bitcoin as well, right?
Well, whether we're right or wrong, we always try to be forward looking. We don't try to be contrarian for contrarian's sake, but when you think about activism as a shareholder, anytime that there's something that's worth being an activist against, by definition, it almost has to be contrarian, right? If it wasn't contrarian, every company would already be doing it. And so there's many things that companies do that we agree with, but when there is something that we think we can help them improve their long run outlook and their long run potential return to our investors, then we're gonna speak up.
Mm. Yes, for sure. Very interesting. Well, no, again, now you're sort of focused on Bitcoin, and that's just interesting. Maybe you can quickly summarize as well. What are you doing now in this sort of Bitcoin industry, and how are you trying to propel it forward?
Mhm. Yeah, so I'm a long time Bitcoiner myself. I got into Bitcoin in 2016, and before that, I was a fixed in, or even when I was first became a Bitcoiner, I was a fixed income portfolio. I worked at a company pension fund called CalPERS, which is about a half a
Mm.
trillion dollar asset manager in America. It's the largest pension fund, and so being on the fixed income desk, I personally managed about $70 billion. So I was one of the largest buyers of U.S. Treasuries, which is the debt of the United States, right? And so this is, prior to my time as a Bitcoiner, I'm staring at a massive debt crisis in our globe and in America as well. And it was really not a good answer to how do we fix the debt crisis. And you think about politicians, you couldn't run as a politician in America. You still can't on a platform to say we are going to actually cut costs to a sufficient degree to fix the debt crisis. I wish that was not the case, but you kept seeing this kick the can down the road, and then the Fed would step in and they would print more money to solve a new issue that would pop up. And I've always viewed quantitative easing as kind of like a drug. And whenever you think about drug usage and addiction to drugs, you always need more of the same drug to get the same effect in the future. And I think that's what we've seen with monetary easing and quantitative easing and money printing. And I think that continues. You either continue to give more and more of the drug, or you wean yourself off. And if you wean yourself off of an addiction, it's painful. And I think that's what we'll see with the printing of money. And I think it ends in tears for fiat currencies. And that's not necessarily in and of itself an argument for Bitcoin. But then you think about, okay, if you're moving away from the ability to have this concept of easy money, printing money without noticeable inflation, then you move to an era of scarcity. But I don't think that we actually have seen no inflation. I think inflation has been in the form of inflation of financial asset prices, where you think about the stock market, about real estate prices, think about gold, you think about Bitcoin, you think about cryptocurrencies outside of Bitcoin, how much these assets are worth. I think that's directly correlated to the rise of money supply. And I don't think they're undervalued. I think what's happened is that the value of a dollar or name your or a euro or a yen has decreased and they're going to continue to decrease. It's hard to see, and one of the things that makes it hard to see is that fiat currencies all around the globe are all printed, and so they, relative to each other, they somewhat stay in balance, but they're worth less, and so that ultimately, and that search for a true scarce asset is what really made me turn into a very hardcore Bitcoiner as the only form of true scarce assets that exists.
Yes, I see. No, and what you're describing is really like this, yeah, like urge that everybody feels, within the fiat system that you sort of have to be invested, and it's even like your mom and pa and just like your normal friend, who's maybe a construction worker and doesn't care about finance at all. And I feel that in my like this like proximity, like people coming up to me and then asking me about investments, and I feel like, wow, that's crazy that they start feeling about these topics. But it's probably just because they feel like some superficial or somewhat hidden urge, that they have to do this. But then the question would be, now in terms of Strive, what is it that you're doing, and yeah, how are you trying to further this cause of Bitcoin?
Mhm. Yeah, so our aim isn't in and of itself to further the cause of Bitcoin. That's kind of a product of our belief in the value of Bitcoin, not in, we're a for-profit corporation, and then we have fiduciary duties to our shareholders. So our shareholders, our clients, are shareholders of almost every company in America. And if you think about as an example, the 500 largest companies in America, which represents most holdings for everyday Americans, right? They own equity positions in these in their retirement accounts. Well, if you think about what happens with innovation, there becomes massive turnover in these indexes. So as an example, versus 1990 to today, there's been about 80% turnover in the S&P 500, meaning that only 20% of companies that were in there in 1990 are still in there today. Why is that? Well, because some companies fell, but also during that window was the rise of the internet. You had a 0 to 1 technological innovation. And so new companies like the Mag 7 stocks, as obviously the most successful examples, rose up in the digital era, and they replaced old companies. So there's obviously the example Netflix versus Blockbuster, right? Blockbuster went out of business. They were not forward looking into the internet era. And before even getting into Bitcoin, we think AI is at least an order of magnitude of a disruptor that the internet was. And so, yes, companies will invest in AI, but just investing in AI does not mean that they're going to keep their corporate moat. And our prediction is that there's going to be hundreds and thousands of companies that are going to rise, new companies that are going to be worth a lot of money, and they're going to disrupt the incumbents in a major way, just like the internet, but likely faster than the internet, because this is what happens with technological innovation. Innovation happens at increasingly exponential rates. And so if that's the case, I don't think 1990 to today is almost 40 years. I don't think it 40 years forward before there's potential for 80% disruption in the S&P 500 again. And so for us, you have our shareholders that are sitting there kind of like sitting ducks in it, right? They own all these companies. A lot of these companies are going to get displaced. Again, we're not even talking about Bitcoin yet. We're just talking about the risks of a corporation, right? And so what do you do if you're a corporation that's going into a known era of disruption? Well, it makes sense to invest in AI, but it also makes sense if you have the opportunity to increase the size of your balance sheet. Again, we're not even talking about Bitcoin, right? We're just saying ton of risks. You're probably going to get disrupted. You still have a moat today. You have an ability to increase the size of your balance sheet, how much money you have on your balance sheet today, by either stopping doing things that's become very popular in America, like stock buybacks, where you take money, buy back the stock to increase the price of the stock. Well, don't do that. Just keep the money, because you might need that money, because what will happen is that as AI disrupts companies, Once they're being disrupted, their stock price will go down, and they won't have the ability once that vicious cycle of decline has happened to raise a bunch of money. They do today. So our view is you raise a bunch of money that's needed to protect yourself against AI. The next question is, what do you put that money in, that long run money in? That's where we believe it's Bitcoin, but it's not just an argument to buy Bitcoin because, even though we are very bullish on Bitcoin, there's another important part of business risks that we see in a major way. And we think that the CEOs of corporations aren't properly incentivized to actually hedge this risk because they're thinking about quarter to quarter, year to year, short-term profits. And if you think about AI, well, AI can increase short-term profits because it can disrupt workers. You can, have less workers, cheaper labor, quote unquote, by moving to some computers, but that's very short-termism, and we need to be long-run investors, and that's where we think larger balance sheets, and then the next part is in Bitcoin.
This show is brought to you by NewHedge. In a market driven by complexity, insight is everything. NewHedge is a dedicated Bitcoin analytics and intelligence platform delivering cutting-edge analysis, on-chain metrics, and real-time market data. With 200 plus proprietary indicators, live derivatives data, and adoption metrics, NewHedge provides the depth and precision that serious market participants demand. Backed by some of Bitcoin's most prolific investors, NewHedge connects traditional finance with Bitcoin's evolving landscape. Gain your data edge today. Sign up for free now at newhedge.io and get 50% off your advanced subscription with the code SIGNAL. Well, very interesting. It's a very fascinating remark or finding that you just shared with us here, like the 80% that's sort of are going out of business, or at least like or leaving the S&P 500. I mean, if we now tie this to Bitcoin, plain and simply, one could even argue or almost argue that at some point these 80% of companies that are going to move into the S&P 500 are the ones owning Bitcoin, maybe on their balance sheet, while the 20% that sort of remain maybe are also companies, that manage to grab onto Bitcoin early enough, So yeah, that's just an interesting thing. I mean, I want to expand on this, but I want to bring in this term, the hurdle rate, that everyone seems to be talking about nowadays. And maybe, as you said before the show, this term has always been quite popular in the US, I guess, but here in Europe, maybe it hasn't been, or at least like to normies like me who are maybe not dealing with CFOs on a daily basis. So can you maybe define and explain it in simple words for our audience? What is hurdle rate?
Mhm. Yeah, so a hurdle rate for a corporation is what return on investment do you need to make to spend money, to do capital expenditures. So if you're going to invest in a new business line, you're going to invest in AI adoption, if you're going to put money to work, so either money that you've already raised, or if you're going to issue debt to deploy capital to grow your business in some way, there's always been a hurdle rate, and that gets into the rate of return calculations that corporations will do, whether it's an NPV, an IRR, what type of return do you need to spend money? And so typically that might be looked at as some premium to US Treasuries. Maybe it's 5% premium to US Treasuries, something like that, that I can just sit on cash that's considered risk-free. I don't think that it's risk-free, but at least in corporate finance, the risk-free rate of return of short-term US Treasuries. And you need to earn some premium on that to take risk with your capital. And so I think right now what's happened is you've had this era of easy money. So what does that mean? It means that US Treasuries actually have a negative real rate of return. But even after factoring in the interest rate, the purchasing power of a dollar invested in US Treasuries has been going down year over year over year, especially with regards to financial assets. And so if you have a negative real rate of return, then cash becomes this game of hot potato where you don't want to hold it. You want to get rid of it as quickly as possible. And when that starts to happen, that's where you get the rise of all these weird financial engineering metrics like stock buybacks at major degrees, because if the rate
Mm,
of return of holding cash is negative, you got to get rid of it. And I would argue that the movement to stock buybacks is already showing that companies are not finding super attractive places to do capital expenditures. And so Strive's not arguing to never focus on growing your business, to shut down all operating businesses. That's not our argument. Our argument is obviously the risk moving forward of a business, but then also the problems from a negative real interest rate and what that's done to the job of the CFO. And so the importance of the rise of a true savings asset, which we believe is Bitcoin. But even if you don't believe in Bitcoin, if you have the return of a real savings asset, it brings back a normalcy to capital deployment that has existed historically in eras of less easy money.
yes, I see. Well, so many interesting points there. I mean, just one thing that comes to mind in terms of like the negative real interest rate, because I've been talking to many people about this as well. And in Europe, especially if you talk to like the left wing people, no, they would argue against these share buybacks, saying, well, this only enriches like the shareholders, it's not in the interest of the company and not even in the interest of society. And obviously, then they would try to go against this in political ways. But here again, what you're telling me is that the root cause of this is actually something else. It's not that these companies actually want to buy back their shares. It's because they have no other alternative, or they find no like sensible alternatives. And that's what I find so interesting. To usually like a lot of these leftish arguments and people maybe from the European liberal side, so to say, when they're going against capitalism and going against the system that we have today, it's really motivated by maybe true good intent, but they're not looking through to the actual underlying effects and problems that we have. And that's what I find so fascinating, where Bitcoin comes in and maybe might be changing some of this, So yeah, it's just something that I wanted to throw in there. Yeah.
Yeah, I think everyone, especially the younger generation that does not have financial assets, whether you're left leaning or right leaning, you see a problem
Mm,
and that problem ultimately comes down to broken money and what broken money is causing, but not just broken money, the the incentives that have been put into corporations around the globe by the printing of money and what that's caused. And so it has obviously enriched just a handful of people. And it hasn't been a free market capitalist system. It's been a system that has been designed to benefit the most wealthy, and it is broken. And but it's not irrational. I think that's the thing, is that the behavior of stock buybacks, I think, sometimes gets criticized as irrational behavior or overly risky behavior, or how come these corporations do it? The corporations are acting rationally because of the game that's been placed in front of them by governments and central banks around the globe.
Yeah, that's a great point. And it's actually where the hurdle rate for me, as I try to rationalize this, comes back in again, because like so far, like these companies and individuals and just funds and everyone, they had no better opportunity because they had no hurdle rate, which was Bitcoin or something like there was no standard, it was just all maybe less superior. And that's why they obviously, yeah, they went to do these share buybacks. But exactly, if you have something else which is maybe more profitable because it's now your new hurdle rate, then you're maybe disincentivized from doing this. And I think that's where the concept of this hurdle rate comes in again, where then CFOs and people have to start thinking about this in more detail, whether an investment makes sense against their internal investments. But one thing in terms of the hurdle rate and being like Bitcoin or potentially something else, what I wanted to ask you, you said that CEOs, it's kind of hard to get them to think long term, about the consequences that are coming their way. They're just thinking about the short term, obviously, because also maybe the system is incentivizing them to do so. How do you get then these people, these CEOs, these CFOs to think about the long term and then about these implications, which then could only lead them to think about changing their hurdle rate, for example?
It's so there's no one size fits all. You talk to and one of the nice things about the rise of Bitcoin at this point is if you think about the C-suite and the board of public companies, you're talking about at least 10 people on average. Combine the board plus the C-suite. And 10 very successful people in a room, if you just pick 10 random successful people, you probably have at least one Bitcoiner in that room, almost by definition. So there's probably a very rare company in America, at least, that doesn't have a Bitcoiner on their board or and so that Bitcoiner themselves might want the company to adopt Bitcoin as a hurdle rate, put Bitcoin on their corporate balance sheet, but they're likely a minority. And I say that from just conversations that we've been having with companies, myself as CEO of a company, and so that becomes a challenge that if you're someone that's convicted in moving this direction, how do you educate the other board members, the other C-suite to do this? Because if you don't understand, first off, you don't understand problems with money, you're not going to understand even potentially that Bitcoin might be interesting. If you don't understand Bitcoin at all, then the concept of putting some asset that you don't understand on your balance sheet makes zero sense. So this starts with a game of education, and it also can be made done quicker by companies like Stripe. And why? Because when you have a shareholder that advocates for something, in and of itself, that might be nothing. So like if Stripe just went and told a company to you know do something that no one on their board, no one in their C-suite wanted to do, we won't be effective. We wouldn't be effective. BlackRock wouldn't be effective in doing that. But when you already have some form of desire to move in that direction, which we think most companies at least have some small form of that, then we can be an amplifier as a long run shareholder to lay out a case. And that's what we did with GameStop, where we sent GameStop a letter. And our belief was that there was a desire for GameStop to move into this direction of putting Bitcoin on their balance sheet, also taking more fiscal discipline, shutting down more stores, but that movement was going to be met with resistance by some investors, some people on the board. And so we as a shareholder said, we're going to take a first principle approach that for them, we see their business, their brick and mortar business as just unfortunately completely failing and failing for a long time with no real hopes of revival. And they've shut down a bunch of stores, but their stores are still losing money that are open today at the same rate of the stores that were shut down. So they just lose less money because they have less stores. But that to me is very similar to what the central banks around the world have done with printing money and just not fixing a problem, but kind of kicking the can down the road. You put a bunch of money on your balance sheet, you earn some interest. That interest basically covers the loss of your businesses that remain. And so now your business is at less risk of going out of business because you're able to cover your losses. But that's kind of just like stopping the bleeding for a second. You haven't fixed the problem. And we need to fix problems, right? Like that's how you make a company not only just survive, but thrive over the long. You got to fix the problem. And so ours was you might need to just cut the arm off of these brick and mortar businesses, and then take this money, put it in a long run savings asset, which is Bitcoin, and then and then you can kind of breathe, because if you're just failing, you can't really breathe. You can't really think strategically long term. Fix the problem, you breathe, and then you think about as a company in the gaming sector, how do you deploy that capital? Whether it's in 12 months, 5 years, 10 years, you have no urgency. You can just really think strategically long run in an era of mass disruption, and then deploy that capital, strategically, almost like a gaming sector hedge fund into the future. And I do think like there's a case to be made. And I know you mentioned zombie companies earlier, and just kind of like them, being the most natural company to adopt Bitcoin. But I think adoption of Bitcoin goes much beyond just zombie companies. But I do think that zombie companies, if they went all in on the Bitcoin standard, will likely become some of the like long run winners. And like the biggest way, which is kind of like it almost sounds like a meme, like like if I said of any, not that zombie companies are a sector, they're not a sector, but like it called them a sector per se. That I could be the most bullish on zombie companies in corporate America because they have no tangible operating business, so it's most easy for them to adopt the Bitcoin standard, and I think that they could then, in the future, acquire a bunch of these AI startups and become the biggest and most successful companies in America. It seems almost like how the heck could you be the most bullish on zombie companies, but it's because of that. They have no other choice.
Yeah. Yeah, that's so an interesting twist. I tweeted about this also a few months ago, and I was always like, obviously looking at zombie companies from a fiat perspective, like as sort of a guy who's really interested in studying economics and the monetary system. I was like, okay, fiat like or zombie companies are probably around because of endless money printing. They're being kept alive, through the system. And I was like, okay, Bitcoin is probably going to make them obsolete because once Bitcoin is sort of disciplining the fiat system, they're going to be gone. And now, in this ironic twist, it almost feels like no, they're the ones that are actually adopting Bitcoin, which, as you just described, can help them further down the road be like successful in buying up other companies, and as you said, AI startups and stuff. So it's just interesting how the world actually moves in real life.
Yeah. And just one other point on to maybe state the obvious on zombie companies, but zombie companies, I think, are proof of an era of non-scarce money. They should not exist, right? They should have been out of business, but they existed because of this crazy era that we've been in. And so as we move into a scarce era, to your point, they're either going to die or they're going to adopt. And so the choice is obvious for them, adopt Bitcoin. The choice for profitable operating companies, they'll take a little bit of humble pie. If you're a Mag 7 company to say, I need to adopt Bitcoin.
Mm, mm. Yeah, for sure. Well, I mean, coming back to the sea level, and the stat that you shared with us, sort of the one out of every 10 sea level person is sort of a Bitcoiner already. Like if I hear that, it sounds to me like okay, there's still a lot of work to be done. We because as you said, we need to educate these people. They need to understand that there is a problem in the first place. They need to understand that Bitcoin is what it is and that it is potential solution for this, but then they will also have time to really study all of this. And so my question is this maybe also the case why we haven't seen that many companies moving into the Bitcoin space and really adopting it as a corporate treasury asset? Now, being like, so it's already 70 companies, I guess, in the US, and some maybe are just too impatient by saying this is not fast enough. But I feel like maybe my question goes into the direction of, is it just a waiting game? Because in 5 years time, 10 years time, a lot of these people in sea level will have left their spots, and new people would have moved in, and hopefully it's going to be Bitcoiners because the Bitcoin movement is unstoppable. And then it's obviously, yeah, it's gonna just naturally change, or what is your view there?
Yeah. Yeah. So just as far as how many in the C-suite and board are Bitcoiners, I think it's probably more than 1 in 10, but
Mhm.
it's a minority. And so that's the bigger point, is that when it's a minority of the people in a room, it's very difficult to actually push forward change. And I do think that the story here really is it is more AI than Bitcoin, but it's AI should scare the crap out of every single board member and C-suite executive in corporate America. And so our angle is that you need a larger balance sheet. Whether you're a Google, you're Amazon, you just thought about your balance sheet as like, hey, how do I could, it's like a kind of like an endless place that I could always, increase the size of the balance sheet. That era will be ending. There's going to be a rise of companies, and these companies that are going to be created through the AI boom might be one person, 5 people, 10 people that can replace companies that are thousands of people because of the productivity enhancement that AI is going to represent companies. And they're going to be able to be popped up super quickly. And so I think if you're looking 10 years down the road, I think you're going to see companies that adopt Bitcoin in the near future still be in the S&P 500 if they do so in an intelligent way. And what I mean by intelligent, I mean don't overlever. Uh, but if they do so in a way that's not over levered, they'll persist in the future. And then many corporate moats are going to be disrupted in major ways. So I don't think it's 40 years before you could see 80% disruption. I think it's less than 20. And so in 10 years from now, I think companies that don't adopt Bitcoin and aren't one of the few that exist in the S&P 500 that will be winners in the AI boom, I think they're already on the potentially on the decline in a way that might be too late to recover. And so to me, this isn't like some moment in time where the C-suite and the board can just sit back and say, "Ah, like, not today, maybe 5 years from now, or maybe 10 years from now." That was obviously true in the past as Bitcoin was rising up from 0 to 80K, but 0 to 100K months ago. But what was different was that AI disruption also wasn't happening right at this moment, and I think that creates a sense of true urgency that all these different this rise of, like, kind of a golden era of technological advancement, does not will not allow for sitting back and just taking your time, and I think many companies will, and our push is for companies to not do that, but, the ones that don't, we'll see how their businesses age over time, and, unfortunately, I think it will be many of them will not do well.
Yeah, it's just the fate of time and the fate of reality, so to say, how things go. But like many miss the boat, and reality has always shown this. But you mentioned GameStop, and obviously they announced that they're going to move into Bitcoin, and now. Maybe can you give us the lowdown on what's been happening? Where are they when it comes to buying Bitcoin? And then also maybe they announced that they will be issuing convertible bonds similar to MicroStrategy or Strategy, how it's called nowadays, has done. Why raise money through debt when you have like 5 billion dollars of cash on your hand as GameStop has? So maybe you can fill us in here.
Yeah, and so I don't have any information that they haven't publicly announced, but I can walk you through my thought process of what I think that they're doing. And so I think them issuing a convertible bond as the first step showed to me that they're looking to do this in a big way. That if they were just looking to buy $1 billion of Bitcoin and that was it, they wouldn't have started with issuing $1 billion convertible. That's point one. But point two is that their their cash, the interest on their cash right now is effectively just covering almost dollar for dollar the losses of their business.
Mhm.
And so they actually haven't fixed their business problem yet. And so until they fix their business problem, they actually don't have the ability to just put that $5 billion into Bitcoin because their actual
Mm.
operating business loses a bunch of money, right? And so they could invest some of that into Bitcoin, but then as soon as they start investing some of it, well, now the interest on that cash won't cover the losses, and now their cash position is just going to be dwindling to cover the losses. So this gets into what are they going to do? Are they going to shut down businesses to reduce their operating loss? Which then that could free up some of that cash to go into Bitcoin, right? I hope that's what they do. That's what our letter laid out that we think that they should. But until they do that, I think that not all of that cash, but a good portion of that cash will have to stay cover their money pit and so this gets into like multiple things, but like what does GameStop need to do for me become ultra bullish on it as a Bitcoin treasury company? It needs to stop the bleeding of its operating losses. And then once it could free up, it could be absent MicroStrategy, like one of the ultimate Bitcoin treasury companies because of the volume of the stock, the amount of trade flow that does, it allows it to issue shares through the ATM at a much higher ratio than most companies would dream of, issue convertible notes, but you also need volume in your stock to be able to do, or they can really create that flywheel. And I think that GameStop should be buying at least $6 billion of Bitcoin. And so that's to me like a minimum metric over the next 12 months. Otherwise, I would view their movement into Bitcoin as more of a LARP than a actual true investment as Bitcoin as a treasury company. So my standard there is very high for them. it would be much lower for other companies because, you have to look at each company on an individual basis, what's achievable for them. For GameStop, the bar should be very high of how much Bitcoin they can and should acquire because they're a true zombie company. And ultimately, you know, as a meme, that GameStop as a meme stock won't persist into it infinity, but fixing your business, acquiring a bunch of capital can position them in a very strong manner.
Yeah, great explanation, actually. Yeah, because like I feel like a lot of people were sort of disappointed when they first heard about the announcement. They were like, okay, why don't they do the cash? They could do it right off the bat. And now they're going to do these convertible bonds where there might be no demand for. And then you just shared this really great explanation why they might not be able to do it outright in cash. And regarding the convertible bond offering, I mean, what's just interesting, we saw it today, just a few hours ago. I think Michael Saylor with Strategy announced that what did they do again? They bought 22,000 bitcoins, and I think they did it through the ATM again, right? If I'm not mistaken, but it still shows there's still probably a lot of demand out there from investors, yeah, to use these sort of tools to help these companies buy more Bitcoin? Or what is your view there? Is maybe the current market environment a little bit too tough for GameStop to pull off something like this, or what is your assessment?
It's not too tough for GameStop. I don't think we live in a period of time that the ability for companies to use the ATM convertible notes to buy Bitcoin will persist for. I think we're probably in an era where there might be a few years to do that. And so this gets into, again, I think the easiest way to explain this stuff sometimes is remove the word Bitcoin and just use the word kappa. That if a company wanted to raise a bunch of cash on their balance sheet to protect itself in the future, it's not always the case that companies can just put cash on their balance sheet. That's why in tough times companies fail. If they could just raise cash, the companies would always just raise cash and they would meet their obligations and they would live to see another day. We've obviously seen this rise of zombie companies, which means that we are in an era where companies that really shouldn't exist are able to exist. And so, but for us, our because we have index funds, our people that invest in our ETFs, they own some of these zombie companies. And so we have to, as fiduciaries, help these zombie companies. How do we help you survive and thrive in the long run? Right. And I don't think in a couple of years from now that a zombie company will just be able to convert into a Bitcoin treasury. They'll fail because we'll aim this era of easy money and companies, I think, 5, 10 years in the future might still put Bitcoin on their balance sheet. Well, we think that'll make sense, but the concept of being able to not just put Bitcoin on your balance sheet, but acquire a war chest of Bitcoin, that's not going to persist forever. That's an opportunity that exists in today's capital markets, and companies need to go big, and GameStop has the ability to go big, except for the fact that they need to fix their operating business, which hemorrhages money.
Yes, I see. Well, very interesting. I mean, you kept on talking about this term, like the era of easy money, and I want to maybe zero in on this as well because I just recently watched this really interesting talk by Vivek, that you mentioned, and he was sort of stating that we no longer live in an era of free money, and that means capital allocators will need to adopt a fixed hurdle rate for the internal investments they make, and that's sort of what you were arguing as well. So now my question would sort of be, um, yeah, I mean, isn't there maybe if I play devil's advocate here also a problem, that in a money or in an environment where there's probably more capital scarcity, maybe people won't be thinking about high risk investments anymore, and to some extent, Bitcoin is still considered by the market a high risk investment, sort of a risk on asset, and that's why maybe in such an area of capital scarcity, not that much capital or money or attention is going towards Bitcoin. Do you see any risk there, or what is your assessment?
Companies today need to be deathly afraid of the future. And so if you're it because of what we've been talking about with AI innovation, and so if you're deathly afraid of the future, if you do nothing, you're gonna die. Like, you will be replaced in the S&P 500. Your business moat's gonna be eroded. And so you're going to, as a company, need to deploy money in very risky ways when you're entering an era of exponential innovation and substantial threat to your business. That's the era that we're going into. So not not doing nothing is not an option. Uh, Innovating in ways, reducing costs through AI is something that I think companies need to be doing. But if you do nothing and you also don't expand your balance sheet and you're disrupted, you're done. You're not going to be able to raise capital, whether it's dollars or Bitcoin, into the future. Right now you can. And so that's where we say, okay, well, if you're going to deploy capital, you have two options. One, you could deploy it in risky projects that you think is going to beat the rate of return of Bitcoin into the future, which we can talk about how to think about that. But just to leave it simple for now is like, if you don't think it can beat Bitcoin, just invest it in the best form of capital that exists today, Bitcoin. And then in the future, if your investments on your left hand that aren't being put into Bitcoin fail, whatever your business most disrupted, now you have a war chest of capital that can be deployed to acquire some of these winners in the AI boom, which is what I think that some of the larger players have the ability to do today, but it just won't exist in the future. If you look at the size of their balance sheet and what they're doing, they're playing a game where they need to be the winner of the AI boom, or they're done because they're not properly preparing themselves on the balance sheet side of the equation.
Mhm. Yeah, so what you're telling me is really that going forward, I mean, even if we move into this area of scarce capital, so to say, companies will have to stay on top of the innovation, and then also obviously make high risk investments, because otherwise, yeah, they're not going to be, or they risk of not being, they run the risk of not being innovative anymore, and that could then sort of put them out of business. And it makes a lot of sense, obviously, that you have to be doing these investments, and then obviously Bitcoin is probably the perfect hurdle rate for this. But I'm curious what you think about the distinction that Vivek also made when he spoke of a low risk hurdle rate. This being U.S. Treasuries, and I think before you said U.S. Treasuries, obviously, even though they pay 4 to 5%, they don't make up for the monetary inflation that's out there, which is around maybe 6 to 7%. And then high risk hurdle rate, which is Bitcoin. So walk us through this. Does this make any sense? Because to me, it does, because obviously, I guess some companies might not be fine with only adopting Bitcoin as a hurdle rate over all their investment strategies, but maybe differentiating here a little.
Yeah, there's a couple of different ways that I think about this. So one is the concept of a checking account versus a savings account. So if you think about that for your personal finances, money that you're going to need to spend in the next year, I would say with regards to corporations, the next 4 to 5 years, probably doesn't make sense for that money to be in a highly volatile asset like Bitcoin, because you have a liability to spend that money. And although the dollar's depreciating, although putting your money in a short-term treasury has a negative real interest rate, it's negative by, a handful of percentage points a year. So over the course of a couple of years, that's a acceptable decrease in purchasing power to have the ensure that you have the money to spend. So I think in that sense, like having a checking account of cash in short-term treasuries makes sense. When you think about
True.
longer term, well, now your money is being depreciated at such a substantial rate that having something that is likely to appreciate over time and has shown to appreciate it over every 4 to 5 year cycle, I think makes a lot of sense. And if you're truly convicted in the disruption of fiat currencies, which we are, then you look for a true scarce asset. If you're moving to a form of scarce capital, you want a scarce asset to meet the times of scarce capital. And Bitcoin is the only truly scarce asset that exists. I think it's well above gold, but I think gold would be the other argument of like a more scarce asset that exists. But that's where you think about longer term putting into Bitcoin. Then you think about how risky is the capital that you're deploying. Well, investing in a completely new business line is obviously super high risk. Investing in your hiring one additional employee or putting an extra 1% or 2% of your budget into AI innovation, probably a pretty low risk investment that you should do. And you probably shouldn't think about investing in AI in the future as beating the hurdle rate of Bitcoin. You should probably think about that as keeping your operating business alive and doing it in a small way. And so I think you know, this is an art. It's not science. Why running a business is hard. It's why as an investor, investing in a portfolio manager is hard. And let me give you one more concept of hurdle rates, and it not from the concept of a CFO or a business, but a portfolio manager, because that's my background, portfolio manager. And portfolio managers have hurdle rates too if you're actively managed portfolio manager. So if you're a stock market portfolio manager, your hurdle rate might be the S&P 500. That you're tasked with beating the S&P 500. As a fixed income portfolio manager, my hurdle rate was the Bloomberg Barclays Ag, like the benchmark for fixed income benchmarks. And so if I was going to invest in a way that was outside of the benchmark, so whether it's the S&P 500 or the Bloomberg Ag, I needed to be confident that I was going to have a higher return than that. And no one ever can define what is the future return of the S&P 500. No portfolio manager knows the answer to that, but they know they're going to be judged that they have to beat the S&P 500 as the hurdle rate. And so that to us is what we're putting on notice for corporate America that, hey, we are setting the hurdle rate for you. We're investors. Our clients are investors in the company. And if you're deploying capital and you're not beating the hurdle rate of Bitcoin, then 5 years, 10 years down the road, we might be voting to replace your job or to replace the entire board of directors because not only did you either ignored us, one, which would not be great, or you listened to us and you thought you were going to beat the return of Bitcoin, but you failed. You've underperformed, and if you underperformed as an executive, you got to be replaced, right? So it's basically setting a standard that hey, here's how we're thinking about. We're not thinking about this as you increasing your returns next quarter. We're going to be thinking about this over the course of the next 4 to 5 years, and we will be judging you accordingly. So take that into account as you think about how you deploy capital, how you make business.
Mhm. Yeah, no, makes a lot of sense. I mean, two more points on the hurdle rate discussion, because like two points of criticism that I often hear sometimes as well, like some people would point to the fact that, yeah, choosing Bitcoin as your hurdle rate, if it's really that well of an investment that's going to perform that well, then maybe yeah, it's going to be hard to outperform Bitcoin, and then maybe as a portfolio manager, because I'm a portfolio manager myself, at a bank, and obviously we have these discussions as well. And then you're like, okay, choosing Bitcoin is almost like chastising yourself, because then you're putting yourself under pressure, and so maybe you don't want to go too hard, and that's one of the points I'm hearing. But maybe then you're just going to be put out of business by other people who will beat Bitcoin in the end and have it as their hurdle rate. So maybe any thoughts you have there?
Yes. So I think that's an exercise in job preservation and not setting a bar high. And the reality is that it's really hard to beat the hurdle rate of Bitcoin. And to me, that makes sense when you've been in this era of easy money that the hurdle rate has been so low to deploy capital that anytime you actually put back in a true difficult hurdle that you have to beat, that's going to be uncomfortable. And my point is that I'm not trying to put pressure on you. If you can accept the humble pie to say, maybe you can't beat Bitcoin. And if you can't, I'm not saying that's not okay. I'm just saying that buy Bitcoin. And if you buy Bitcoin and you live to see another day, then that's okay. And that will be the case for most companies. And I think this gets into one of the other realities of the AI innovation is that you won't need as much capital to innovate into the future as you have into the past because of the power that AI is going to put into the hands of the individual, the hands of company. And so if that is true, and I believe that that is true, then because you need less capital to innovate, you can really think about this in a much different way. Where today, we're still in an era of pretty easy money. I think my point of explain is that we're leaving that era, and that era you can kind of sense that we're leaving it, and it may be gone next month, it might be next year, it might be 3 years, 5 years in the future. Like no one knows the answer to when it's gone, but when it's gone, and it likely is gone in some form of at least a short term crisis that will exist when you have a massive shift in era, and so right now, while it exists, that you gotta put yourself on the highest standard possible, and if you're not, then you're likely trying to just preserve your job, and I think that's some of the things that I've seen even in the crypto markets where some of the, crypto VCs and stuff, you'll say, "Well, what's your hurdle rate? What's your benchmark?" And I'll challenge them and say, "Your benchmark should be Bitcoin." Like, "No, no, no, like, my benchmark's not Bitcoin," and they really push back. Well, if I were them and I'm trying to talk my book, I would be saying the same thing, probably because you don't feel comfortable that you can beat Bitcoin. But if you can't accept Bitcoin as a hurdle rate, and some have, by the way, and some have beat Bitcoin as a hurdle rate. But if you can't do that, then that to me is a red flag of putting my
Yeah. No, that's actually a great point, and obviously something we've been discussing internally as well for quite some time. But maybe just quickly bringing up the other point or piece of criticism that I sometimes hear because it's on the other side, sort of like when you're telling me, okay, Bitcoin is going to be hard to beat as a hurdle rate, then some critics point to the or ask the question, well, doesn't this then depend on a high future CAGR of Bitcoin that nobody knows? Or why do you know that it's going to be hard to beat Bitcoin as your hurdle rate? Any
Hmm?
thoughts on that?
Yeah, so obviously the returns of Bitcoin have obviously been great historically, and I think that there's an unknown future, and so I could point to different versions of the future where the future return of Bitcoin is extremely high, and moderately low. But what's interesting is that really depends on the era, the austerity around the globe and in the United States. So if you take an era of massive austerity, well, that's likely going to be an era where financial assets do very poorly. And so Bitcoin might do more poorly in that environment because it's correlated to austerity. In an era of helicopter money,
Mhm.
Bitcoin's future returns might literally be higher than they've ever been in the past. And it could literally I could create scenarios where the price of Bitcoin is literally like infinite. But that's not a scenario that would be good for society, in my view. I hope it doesn't happen, and I'm trying to advocate for it not to happen. But my point being is that we don't have control over money printing. We don't have control over some of these things in the future. But if that's what's been the major driver of financial asset prices over the last 15 years is quantitative easing and money printing, and my prediction is that that will persist into the future, then having an asset that is correlated to that's been driving financial assets is
Mhm.
actually a great thing for a hurdle rate, even if whether the CAGR is high or the CAGR is low, because you're actually almost perfectly hedging against the biggest driver of financial assets.
Mhm. Yeah, these are some great points as well. Well, I mean, coming to a end here, I just wanted to ask this one last question. As if I'm informed correctly, I think you recently attended the famous Bitcoin Investor Week in New York as well. That's usually put on by the famous Anthony Pompliano. So, any takeaways from this event? What was the sentiment like on the ground?
Mhm. The sentiment was overwhelmingly positive, and one of the things that was nice about it is I felt like there were a bunch of people from corporate America, from asset managers that would never have gone to these events before, and a lot of them were true Bitcoin that have kind of risen within the ranks of their organization or been hired by their organization, and so me, that's a big positive is this concept, kind of what we're talking about with the C-suites and board members of kind of having at least one Bitcoiner. Well, you were seeing that with the people that were attending there and really trying to get their bearings and integrate within the Bitcoin community. And so that was positive to me. And continually, what one of the things that I've loved about the Bitcoin community is the grassroots willing to help each other, and really this more concept of a rising tide lifting all boats, where some of these companies are competing with each other, but I think there's still this true belief that we can help each other and help each other win. And I think that's where, for people that are in this community, I would definitely recommend to go to these events, be active on X, just how we got connected, right? That you really can learn a lot, and not only just learn a lot, but actually interact with different people, and that they want to help and help bring forth the best arguments. Because if you're not challenging your priors, then you're going to fall behind. And so I think that's a good thing. And I think that's what's been happening.
Yes, sure. Well said. Well, Matt, thanks a lot for sharing all these insights with us. Any last thoughts that you want to leave us with?
No, I guess one last thought would be, we obviously talked a lot about AI in this. And my belief for people would be that if I wasn't the CEO of Strive, and even as a CEO, invest in learning AI in a deep way. That's probably the most productive use of your time outside. Obviously, understand money, understand Bitcoin, but understand AI and save in Bitcoin. And if you do those things, I really think that this era that has really, made kind of screwed the younger generation can be turned around and made into a positive for your own life. And so I think those are the most productive ways to spend your time. And
Yeah, that's great advice. It's maybe a lot of people have been sharing their Ghibli images, that we've been seeing around, floating around. So I hope the education with AI for many people doesn't stop there, but they're going beyond this. So that's surely some great advice as well. So Matt, thanks a lot. Have a great afternoon, I guess, and talk to you maybe some other time.
sounds great. Thanks for having me.
Thank you.